Hello my fellow freedom builders and welcome back to the channel. This is a bit of a late video today and I am making it since the market is plummeting. It is going downwards from a bit of an unfortunate place where we are starting to make lower highs and lower lows on a weekly chart here on the S&P 500. And Nasdaq is also close to doing the same. So I just wanted to make a little video about why this is happening, what is causing the market to drop. Of course, we have been going up for a while, and as we know, the S&P 500, I made a couple of videos about that. The S&P 500 has been carried up by a few very large tech stocks. And right now it just seems like there's not much support, and maybe the market could drop down another 3, 4, 5% down to a support area here. That would not surprise me very much. However, there is a reason why the market is dropping right now. If we are looking at the statistical tool, this is the TPI tool from my stock scanner as you know it. It actually seems on a pure statistical base that now this is the SPY, the ETF that covers S&P 500. We can see it has been in a very long green uptrend here on the long term, just down a single day to red and then back into green. We can also see it is green on a daily. This I should say is from yesterday. And then we had a weekly that has gone into the oversold accumulation phase. So basically what this is telling us is, from a statistical point of view, counting waves and the length of waves and so on and so forth on the S&P 500, it indicates that it might be time for buyers to come in. Now, it's very important to remember that this is just a statistical tool, and stats cannot really do much about what is happening right now. Stats are looking back and said there is a higher probability of this happening over that. However, right now the market is dropping no matter what the stats are telling us, and the reason for that are twofold. If we start in China, we have the Evergrande problem. The entire real estate sector in China is in deep trouble. If you have been following both my videos and a ton of articles and YouTube videos on the internet, you have been able to follow a complete shit show going on in China, where they have been building millions and millions and millions of apartments, and there have not been people for that. Also, they have leveraged their investments. This Evergrande, I think it's the second largest company in China on the property sector. They are leveraged in a way that you wouldn't believe. So right now, we can see that they are starting to not being able to pay off the creditors. They are in deep trouble. And Evergrande is not the only property company in China. There is that, but they are kind of the poster child for all of these problems, and the company that is brought up again and again. The problem here are several, actually. Of course, there is the problem that the Chinese civilians, they do not have many places to put their money as investments. So basically every single Chinese person with a bit of liquidity are putting their money, or have been putting their money, into properties, because that have been the certain way of getting a good return. So that means that a ton of money, I mean billions and billions and billions of dollars of money invested from civilians in China, they are now close to being lost, or at least a lot of it is lost. And that is the money that the Chinese people are taking out to spend on a day-to-day basis. And it is also a lot of Chinese people's retirement funds. And if we are seeing several hundred million people in China losing a big chunk of their retirement funds and now don't have any money to spend, that can set up a recession all by itself. Then, of course, there are the implications that Evergrande have borrowed money from all over the world. So there are a lot of banks all around the world, big financial institutions, that are set to lose billions if this really collapses. And I am not at all in any doubt that this will collapse at some point. The question is, will it collapse today, tomorrow, in a year, in 10 years? That all depends on how long time the Chinese government can keep this running in a kind of a fake way and just pumping some liquidity into it. They have tried to meddle a bit with the interest rates and so on. So it's a good question if Evergrande and the other real estate property companies can keep going. But this is something you should really pay attention to, because if this collapses, it will have a worldwide effect. So that is one of the reasons why we are seeing this right now. The market just drops. We can also see on the Hang Seng index here, we can see that that one also drops in these days. And if we're looking at the overall Chinese level here, if you think we have had it bad here in the Western world, this is the Hang Seng index futures, and you can see just from the latest top here back in February 21, we are right now down 43%. From the last top here back in January this year, we are down 23% just this year, and from the top back in February 18, so that is 5.5 years ago, they're down 47%. So it is a tough spot to be in the Chinese market right now. There is also another index. Let me find it down here. I think this is the one. The Golden Dragon China Index. These are large Chinese companies that are on the US stock exchange. And as you can see, they topped out in February 21 here. And it has not been looking pretty for a very, very long time. They're down 69%. So not looking pretty at all. All right, so that is the China problem, and that is definitely something that could drag the entire world down, the stock markets, the economies over the upcoming years. But right now, there is actually a more urgent problem that I think investors are even more concerned about, and that is United States. And I'm not talking about, well, I'm kind of talking about the debt, but I'm not talking about the problem that they have this much debt and that they have to pay a high interest rate on that. No, I am talking about the potential shutdown of the US government, or not the government, but a lot of the governmental agencies and offices. And basically several 100,000 people can, within the next 4, 5, 6 days, be on the street without a paycheck, simply because there is something in the United States called a debt ceiling. And the debt ceiling is this kind of an artificial construction where there is a law saying that they can maximum have a debt of a certain amount, and they are struggling with that time and time again in the United States. And they're not really relating it to the GDP, which is even stranger, because you can see that the percentage of the debt compared to GDP right now is actually basically the same as it was a couple of years ago. But they are looking at the absolute amount. And the problem right now is something called, someone that calls himself the Freedom Caucus. In the Congress in the United States, there's a Senate and there's a House. And in the House, the Republicans have the majority, but only by four votes, four persons. And that is a problem, because last time they had to figure out who should be the Speaker of the House. They had a hard time figuring out who it should be, and the vote ended on Kevin McCarthy. However, the so-called Freedom Caucus, that is the right wing of the Republican Party, they're calling themselves the MAGA extremists. I have heard they are close to Trump and the MAGA movement, and they don't like Kevin McCarthy, so they said that if he should be the Speaker of the House, they would put in a lot of terms and conditions, and basically they said, we want to decide everything and we can kick you out right away. So right now, in the spring, he made a temporary deal about this debt ceiling and the budgets, and the can was kicked a bit down the road. And now the road ends. There is a big brick wall here at the end of the road, and the can is hitting that big brick wall at the end of the road, and is not getting any further. What does that mean? Well, it means that these Freedom Caucus, and we're talking about 15, 20 people in the entire House, are basically deciding right now that the US economy, or at least the public spending, should come to a halt within a few days. That means all public offices, that we are talking nurses, we're talking all sorts of people in the public system, United States, simply won't be paid a paycheck. Of course, the people in the Congress are getting their paycheck, so no worries there. But that basically means that this budget negotiations are developing into a really, really hard thing to solve. And that could be a huge problem. United States are in a bit of a predicament right now. They are in a tough spot with the entire financial environment, with the interest rates going up and so on. And they definitely do not need this. Several of the credit rating agencies have been downgrading United States. Not all of them yet, but I'm pretty sure if this budget negotiations keep going on for weeks and months, United States will be downgraded. With the downgrade follows higher interest rates, probably, meaning that they are putting United States into even deeper problems. So if there is something that the financial markets do not like, it is uncertainty. And what we are seeing right now is a big splash of uncertainty coming into the pool. Also, but that is not so much on the budget, but they are actually, with Donald Trump in the background, claiming that they should stop all help to Ukraine. That has not so much to do with the stock markets, but that is something definitely that should concern Ukraine and all of us in Western Europe as well. But it's just to say that these two things, the entire problem with the US government and their budget negotiations, and then, of course, the China problem is what is pushing the market down right now. You could say, well, if there are only 20 people in this Freedom Caucus of these MAGA extremists, could the rest of the Republicans not just then vote for the budget and that could go through? And as far as I can read, yes, they could. However, this Freedom Caucus, these 15, 20 people then have the ultimate right just to kick Kevin McCarthy out as Speaker of the House, meaning that then the House will be without a Speaker. A House without a Speaker cannot decide anything, no laws, no decisions, no nothing, which means that United States might get their budget through, as far as I can read, but then they are with the House in the Congress that can't do anything. They are completely paralyzed. So we are basically staring into two different scenarios in United States. One where they shut down the entire public sector because of the debt ceiling and they can't figure out a solution. Or they figure out a solution with the budget, but then they kick out the Speaker of the House and they are completely paralyzed and haven't got a Speaker of the House. Basically, this is a mess. And it is amazing that someone that calls himself the leader of the free world can end up in a situation where 15, 20 so-called MAGA extremists can basically decide if the country is shutting down, and they can have an effect on the entire world's stock markets. So if this continues, it will probably pressure the stock markets further down, and I think we can see some fairly red markets. And of course, if all of a sudden they solve it, or there are some rumors about it being solved, everything can go up again. But I am glad that I have hedged many of my US positions with some good options, simply so that I'm not getting hit too severely by this. It can be really ugly, and it already is. So keep an eye out the next couple of days. One, for the China situation, the Evergrande and so on, the property sector. And two, especially keep an eye out about this shutdown from the US Congress. That is really something that could have a severe effect over the next days, weeks, maybe even months. All right. I hope this made sense, and until next time, take care of yourself and your money out there, and I'll speak to you again shortly. Bye for now.